Manu, thanks so much for joining us. So, super excited to be doing a second transaction with CredAble. I did mention in the beginning that our first transaction, which was roughly of 11 crores, we done in July, has fully matured. All
Yes.
investor payouts were done on time, no default, no delays. And it's an opportune time to bring the second InvoiceX also in partnership with your company onto the platform. Maybe I'll ask you to just talk a little bit about your background and also CredAble, please.
Yes, thank you, Nikhil, and thank you for filling me in. Maybe the tech issues might be taking some time to get resolved. But whatever you said in the beginning, and obviously this is the second transaction that we are doing. But CredAble as an institute for doing a securitization transaction is there for more than a year now, and the marquee investors have shown faith, and obviously the investors have been able to get returns both on the primary as well as on the secondary side. The slide which is there on the screen for the folks who have joined the webinar, CredAble obviously is a trade name for us. We started our journey in 2017, and then we floated a NBFC in 19, and the NBFC is currently triple B rated. What we do supply chain financing in the NBFC, and the current AUM is in excess of 7 billion right now. And the investors that we have at the holding company, and the parent itself is Oaks and Plutus, along with the Axis Bank Limited. The slide also shows a revenue snapshot. We are happy to inform the members here that we are now profitable at the consolidated level for continuously 2 months now. NBFC has been profitable for the last financial year as well, but on the console level, we just turned profitable. So that is a good achievement for us. The founders are Nirav and Ram, as appearing on the right side of the slide. I am down below, and in my current designation and role, I manage the debt and capital markets and couple of more functions for the NBFC as well as for the holding company.
Do you want to just talk about the profile of the portfolio as well?
Yes, I think the slides gives a good overview in a succinct form on the portfolio. I think the main thing that needs to be focused is the growth. We are not in unsecured consumer loans, and it's all B2B that we do, and that's where the growth has been linear. And from 572, we are now at 700. So the growth has been in the range of say about 25 to 30% year on year. That is the financial year I'm talking about. Also, thing is on the granularity of the book that we have, and that is in the third quadrant, which is shown here. The large ticket size loans we usually avoid doing. And whenever we take a exposure on a large anchor on a program specific lending, what we try to do is to distribute that loan to the vendor ecosystem. And that's where for a single anchor, the loan gets distributed to a tier one vendors of the large buyer. And that's where the risk gets mitigated. The credit enhancement in the entire structuring is given either by a security deposit or a personal guarantee or a corporate guarantee by the anchor. And that's where the entire credit is getting secured. On the returns that we have, obviously we work in a range of 16 to 18 IRR on our returns on our portfolio, and that has been consistent. Over the last financial year, our NPA has been in the range of 1%, which is kind of best in the industry. And that showcases the strength of the underwriting as well as the portfolio that we have. Another beauty on the portfolio being that all the loans that we have are on a self-liquidating structure, wherein the discounting is the delivery of the goods or the services. And we ensure that the money from the receiver of these goods and services is credited to the escrow or the virtual account in the NBFC itself that has lended to it. That is Equintia Financial Services.
Thanks so much, Manu. Before I move on to the next section, which is the investment option itself, I'd like everyone to hang on to a few things that Manu said. Number one is the fact that the portfolio NPA is less than 1%. I think that's really important for you to think about as an investor buying into a diversified portfolio with a 25% security deposit. So how does a 25% security deposit compare to a 1% NPA. Number two is the diversification of the pool, even at a portfolio level. And third is the point that there's an escrow in place which protects investors from a cash flow situation where the NBFC as an intermediary does not pay. So I think there are inherent comforts built into the product because of a partner like CredAble, which make the InvoiceX product even more exciting as an investment opportunity. On that note, I'll dive into InvoiceX A1 250. The name is coined because the product is rated A1 by an external rating agency, and it is backed by around 250 invoices, giving you incredible exposure. This slide neatly captures all of the key highlights. I'll spend time on a couple of key attributes of the product that may be of relevance to you. The deal tenure total is 9 months, and the interest is received on a monthly basis. The principal, however, from a return perspective, is received in the last 3 months. So monthly interest and last 3 months of principal return. The structure is built with a security package, and that security package includes 3 key aspects. 12% of over collateralization, which means that if you are investing 100 rupees, the loan portfolio that is backing it is actually 112 rupees. 5% cash collateral is in other words, a security deposit provided by CredAble in the form of cash or bank guarantee to the trust for the structure. And the excess interest spread is the additional interest on the original loan made by CredAble, but is available to investors first. Manu talked about how the underlying loans are at 16 to 17%. That additional interest is available to investors as a security feature. Manu also talked about how in the past there have been certain large institutional investments. One of the most recent ones, and we'll spend some more time on it, was done by Kotak Mahindra Investments, who purchased a very, very similar investment product from CredAble. We have to also help you understand why we are excited about this. And as you know, the GRIP team does a tremendous amount of work on each investment opportunity. We're obviously excited to bring this to you, one, for the attractive returns it offers, especially as compared to other products in invoice discounting or even similarly rated corporate bonds, where InvoiceX gives you almost 200 bips higher in returns. The second is the pool diversification, which is 250 invoices diversified across 27 anchors. As I mentioned, it's not a single company exposure. It's diversified across 27 anchors. And these are the likes of Google, Wipro, Amazon, and Kirloskar Industries. In fact, out of those 27, 16 of them are rated investment grade. So 16 of the companies against whom the invoices are also rated, and they have an investment grade rating. The next point is the security cover of close to 23%, which is available in the form of over collateralization and cash. The scale of the originator, which is very important because it is the track record of the originator, which gives us a tremendous amount of comfort. And finally, the payment track record of CredAble from the past transactions done with GRIP, as well as with other institutional investors. Spending a few more minutes on the portfolio of these 200 invoices to give you, as much transparency and information. This is the breakup between all of the anchors. The top 10 anchors make up close to 70% of the pool, and the remaining 17 anchors make up 30% of the pool. You will recognize some of these names from familiar names that you may be coming across or you may be familiar with in general. The invoices are also broken down into what is the different tenures of the invoices that are in play. And finally, the fact that 62% of the companies are investment grade rated. I'll go back to Manu to talk a little bit about this slide. These are 3 recent transactions done by CredAble, where a similar investment portfolio was offered not to retail investors, but to large institutions like Northern Arc, Godrej Capital, and Kotak. Manu, this is obviously securitization or such transactions are a good way to raise capital for CredAble. If you could help explain, maybe one is why the NBFC does it, and number two, from a retail investor's point of view or individual investor's point of view, how different are these transactions from what Grip is offering them?
Yes, sure. So I think on the first point, whether this forms a essential part or strategy of my NBFC to manage the ALM, the answer is not exactly. But I think this is something from the fintech's perspective we want to do. As I mentioned in the last webinar as well, we wish to bring new structures to the industry, and partners like you are who are willing to experiment, who are willing to get their hands dirty by bringing in exotic structures for the investors, having a win-win situation on all the sides, and that's where we wish to do such transactions. Obviously, we have not heard as yet any such transaction on supply chain side where investor has come in a securitization under the RBI securitization has happened. While when we started in 2019, I believe we did our first securitization under the SEBI, but after that the law got changed, and also we also moved our needle, and then we managed to get the first one done through Northern Arc. So Northern Arc has been our very strategic partner. They also wanted to do something new, and that's where we did our first transaction. The entire purchase was done by the Northern Arc, and obviously the instrument lived its life. The return was given to the investor, which is Northern Arc. In terms of the Godrej Capital and Kotak, these kind of priority sector assets, along with a book on the supply chain. Supply chain asset build-up requires a lot of expertise, as well as the understanding on how the industry works, and that's where on the specific quarters, these two large NBFCs wanted to show to their investors some supply chain assets, and that's why they bought the assets from us in the primary market, and that was primarily the reason. While on the ALM perspective, the PTC money does gives a cushion, but for us to reach that stage, I think another year or so, where this forms a integral part of my ALM management will kick in. But currently, it is something wherein on a quarterly basis, once in a quarter transaction that we do. But in terms of capitalization of my NBFC, along with the debtors, which are in excess of 15 right now, we are sufficiently funded.
Thanks, Manu, for that context. And there are a few other questions that folks have on this. I'll come to that. But just, for the supply chain financing securitization that have been done, how should investors see those transactions with a Kotak or a Godrej different from the one that's being offered today under InvoiceX? Is there a significantly different structure, security package available, or are they largely the same?
From the primary investor, they're largely the same. And what we wanted to do, and I think Nikhil will also speak about it, we wanted to bring something for the retail segment by breaking the instrument into the secondary market to a limit of, say, about 1 lakh. Earlier, the cap was 10 lakh. But now I think with our understanding and what we have understood from the regulators as well, 1 lakh ticket size is very well permitted, and it will give a scope for smaller investors to be a part of this asset class as well.
Yeah, absolutely. And I think this is what truly Grip's objective was behind, is to find opportunities that are institutional, right? Which are institutional investors are putting their money behind. And names like Kotak, Godrej, and Northern Arc are as gold standard as it can be, and offer the same opportunities to retail investors at the smallest possible ticket size, so that there is no difference between how you can build your portfolio and large investors can build their portfolio. And I think this partnership with CredAble allows us to do just that. Manu, I'll move to Q&A. I think there are lots of questions around the underlying invoices itself and how that is structured. So let me pick them one by one. First of all is, we saw names like Google, Wipro, Bharat Forge, who have partnered with you and their vendors have taken financing. The
Yes.
question is, why would large cash-rich companies enter into such a anchored program with CredAble in the first place? Why does it make sense for them?
Yes, so I think for the understanding on the pool itself, there are two type of main structures which are being discussed here. One wherein the anchor or the buyer of the goods and services has provided their skin in the game, and other is wherein only the receivable from the large anchors with the likes of Wipro and Google are willing to route the receivables through me. So when we talk about, or the question is pertain to the anchor wherein why they will do it, it is largely being initiated by the service providers to these large organizations. And once the delivery of the goods is done or the services is done, we receive the invoices and then we discount it, but the receivable comes to us. And whatever is my due, I keep it and rest I return to the seller or the provider of the services.
Thanks, Manu. Manu, the next question is around the concept of replenishment.
Hmm.
And I can just take the lead and then I'll ask you to help with more details. Um, in this structure, there is a concept of replenishment, and Rishabh, thank you for picking it up. Um, the transaction is structured where, because invoices typically have a tenure of anywhere between 30 to 120 days, while as this investment has a tenure of 9 months. So, what is happening to the invoices that get repaid between those 9 months? What happens is that CredAble pays out the interest to investors, but uses the principal of those invoices to provide new loans backed by new invoices. And all those loans and invoices are also assigned to investors through the SDI structure. So you continue to have the backing, and CredAble is able to create more loans. The only reason to do this is because otherwise having a small transaction becomes economically inefficient for CredAble to do, and hence creating the replenishment structure makes the transaction more economically viable.
Correct.
As an investor, you continue to earn the interest. You also continue to benefit from a security of the additional loans given. And this is the concept of replenishment. Manu, I have tried to make it very basic, but I'd love to hear more details from you because you're far more experienced than I am on the replenishment structure.
No, I think you explained it very well. The only thing I wish to add here is that once the terminology like multi-anchor and multi-vendor is kind of palatable, I think the replenishment part could be easily understood. So for the gentleman who has asked this question, once the pool of vendors and the pool of anchors have been agreed, uh, a tranche which is getting paid off, a similar set of transaction between the two counterparties would be generated, sold down, assigned, and those returns would be given. So that in the first 6 months, there would be no rundown. Otherwise, it will become a very. That's where most of the other incumbents are not able to bring the structure to the market because the market is largely more attuned with understanding of long tenor loans, be it 4 to 5 years of PLs or nearly 5, 7 years of housing loans.
Perfect. Thanks, Manu. I'll move to this another question on the anchor and vendors, which is around who's accountable for the payments. And maybe you could, while you talked about the anchor tranche and or the anchor uh, partnership and the vendor partnership or the vendor program, maybe you could spend a little bit more time to give clarity on how the repayments flow.
See, in terms of the very basic concept of who is a borrower for me, the borrower is always the supplier of goods or services. And that's where the payment has to come in. How the payment hits my account is a transactional thing, wherein I do a arrangement by giving a facility to a borrower who is again a seller of goods or services by telling him that the receivables have to be received by me first and then I will keep my share and return the money to you. So the question in layman term is that my recourse is to the seller of the goods and services for this transaction that we are talking about.
I'm going to try to club a few questions together, which are generally on the same lines, and I'll just try to repeat the answer so that there is complete clarity. Um, in all cases, the loan is given by CredAble against an invoice. In certain cases, the payment flows from the, and in all cases, whoever is getting that loan is paying the amount to CredAble. In certain cases, CredAble has created partnerships with the anchors. For the sake of taking an example, for example, Wipro. And in those cases, there is an escrow arrangement in place where the money for the invoice first comes to CredAble and the balance passes on to the vendor.
Yeah.
In certain cases, which is roughly 50% of the cases, the payment comes directly from the borrower, which is the vendor, to CredAble, and then CredAble pays to the investors. So that is the flow of money. One of the questions that's been asked here is, on other platforms, we have also invested in invoices where we were supposed to receive money from the vendors, but we didn't receive it, right? So what happens and how is this structure better than that structure? I think of all the reasons, I'll pick two, right? Number one, CredAble has skin in the game. CredAble has provided a security deposit. CredAble has provided additional loans. And CredAble is saying that all the interest from this structure that I am supposed to get as an NBFC will first come to the investors. And until they receive the returns, I will not receive it, right? That skin in the game amounts to nearly 23% of the total pool on day one. This mitigates your risk to a large extent from any vendor who may not pay or may delay the payment. That's the first big protection. The second big protection is the fact that CredAble is a regulated NBFC. It has incredible powers of taking action when a loan defaults. Simple things like impacting the CIBIL, impacting the credit worthiness of the vendor, and preventing it from ever being able to take finance again. As a platform, and I speak I speak for all OBPP platforms as well, our ability to blacklist a borrower, right, someone who's not paid the invoice, does not exist. We are not RBI regulated entities who can blacklist someone on CIBIL or NCLT for not paying. We can raise concern as creditors, but we cannot take the same powers that an NBFC has. This difference is very, very large in terms of how vendors perceive. And vendors would be far more concerned about defaulting or delaying a CredAble payment than to a platform. It's a critical reason why majority of products that Grip offers today are in partnership with NBFCs, because it allows protection to come to you as an investor. Manu, anything you'd like to add or correct me on?
Yes. So one part wherein you mentioned peer-to-peer lending, which is kind of a gray area, and lending by an NBFC, that is what we have been discussing here. The reporting to regulator in terms of defaults, delays is very prompt, and as per the regulation put down by Reserve Bank of India. And that's where the fear factor in terms of any delays coming from the borrower on books, which are the vendors or the supplier of the goods and services, kicks in. And that's very well captured by Nikhil itself. One addition to what Nikhil mentioned in terms of the repayments, one thing is there that the change of accounts by the anchor is mandatory to be done. And the money which was due or other due from the buyer to be given to the vendor has to be routed through the virtual account created in the NBFC in the name of the vendor itself. So what usually happens once the whole turnover thing kicks in, even though the invoices are not discounted by me, the money will keep coming in for the services which the vendor keeps on providing to these large anchors. So at any point of time, I keep on receiving the money while I'm not out of money. And that gives a part of the over collateralization, which is always there for the loans that Equintia or the NBFC gives out to the vendors.
Thanks so much, Manu, for adding that. Manu, could you also help talk a little bit about what is the work done at CredAble's end before any loan is given out, right? And I'll add some a specific question that came in the line. from Deepak, which is, do you look at credit insurance cover from trade credit insurance companies as part of your process, or what else is done to mitigate credit default for the invoices you are financing?
Yes, so in terms of the credit appraisal that we do, the digital part is minimal. We do not lend to anyone without meeting them, and it's completely a branch model that we follow with the sales team across all the major tier one and the major metros that we have. A visit to the customer, understanding the key aspects of his business, then putting the entire credit assessment memo, presenting it to the committee members, and that's that we have been doing for the last 5 odd years, and that has really helped us in managing a very fine overdues in the portfolio that we have. So most of the invoice discounting, which is kind of projected via platform in the industry, they are largely on the digital side. We are a very traditional lender with a specific brick and mortar kind of a model that we follow, and that mitigates a lot of kind of discrepancies that might come across while assessing any case.
Perfect. And the proof of the pudding is that the NPA at CredAble is less than 1%, which means those processes put in place across a 500 crore portfolio are obviously working.
Yes, and this has been kind of supported by the rating that we have received. Usually, NBFC with the AUM that we are having, the rating such kind of triple B stable is not heard of, but we have been kind of able to showcase our capability to the rating agency, which is obviously an independent one and a regulated one, and our rating has been kind of maintained at a triple B level.
Thanks, Manu. Manu, the next question is regarding the security structure. And there is one more component of security that we haven't spoken in detail, which is the equity tranche. Could you spend some time explaining how the equity tranche works in products like this?
Yes, I think from the layman terms, equity tranche is something that I have put my skin in the game in terms of any instrument or the pool of loans that have been offered to the investor. I also put in my equity in that loan so that any return or any unfavorable situation coming in, I also take ahead to that percentage amount.
Yeah, absolutely. Is it fair to think of it as another layer of over collateralization? Because
yes, absolutely, yes.
So just for the real impact, it almost means that CredAble has purchased a part of this investment, but they're saying, give me my returns last. Okay. As an investor, you will get your returns first. And if everyone gets the returns, then my investment will also pay out. So you are effectively a co-investor to CredAble, or CredAble is a co-investor to you, taking the same risk. Actually, they're taking the worst risk because they're holding or getting returns only in the end.
Yes, these are the normal waterfall arrangements which happens in such transactions. Since I know the portfolio in and out, we have absolutely no issue in getting it done. And obviously, it is the top of the investment grade the instrument is, which is A1. So that's where the entire waterfall mechanism, the over collateralization, the equity tranche really helps in.
Perfect. Thank you. I think there are a few questions from someone who's logged in, Ankit Joshi. And Ankit, I'm going to try to answer those for you. One is you've compared invoice discounting on certain platforms versus InvoiceX as a product. And maybe I'll just bring you back to this slide now that you have seen the investment option of the current InvoiceX. But I think the comparison on returns, and I'll be the first, as you can see on this slide, to admit that invoice discounting platforms do have 12 to 14% returns on invoice discounting. However, the risk is entirely different from an InvoiceX because of the diversification, because of the security structure, because of the regulations that are behind an InvoiceX transaction. You are getting a lower absolute return, but when you adjust for the risk, we believe that the InvoiceX product gives you a far better return. Your other question was, some of the experience you may have had on other platforms where, despite doing large volumes, there are defaults. I think understandable defaults do happen, and as a platform, what we can do is to build as much security and as much diversification to protect you. Defaults that have happened in the past in invoice discounting have had neither the diversification nor the security. And hence, we believe that this InvoiceX structure will try to have mitigate those risks, and the same experiences that you've had on other platforms should not take place. I'll pick up a few other questions on the transaction structure itself. Number one, on the tax. The tax for this instrument is on your marginal tax rate. So whatever interest income you receive will be taxed at a marginal tax rate. There's a TDS of 25%, which will be withheld by the trust and paid to the government. You will obviously receive a TDS certificate and allow you to adjust for that TDS deduction and then adjust it to your marginal tax rate. In terms of capital coming back, who's going to be paying for the capital? The capital comes back from the underlying loans and invoices itself. There is a replenishment structure for the first 6 months, which means that the principal is used for making new loans. But in the 7th, 8th, and 9th month, and I'll quickly go to a cash flow chart. In the 7th, 8th, and 9th month, your principal comes back because the same loans repay the money and they are distributed out to you. So month 1 to month 6, you're receiving interest, and month 7 to month 9, you're receiving also your principal back. The next question is around the record date. Sir, ma'am, I don't have your name, so I'll just address it. The record date is 28th. And the question that is being asked is, why am I not receiving a payout if I'm investing today? The payout for your investment is actually factored into the price itself. When you go to our website and you see the purchase price, you will see a concept called accrued interest, which is interest that has been accrued between the record date and your investment date. It shows up as a negative number. So your investment amount is being reduced by the interest that is already accrued to you. And this allows you to invest without worrying about the record date. All right. Manu, back to you for maybe one final question. And then there's some general question on grip, which I'll take. If you're comfortable, could you give a sense of the returns that Kotak, Northern Arc, and Godrej received on the product? Is it in the same ballpark as the InvoiceX transaction?
Yes, I think it's a public information because everything which has been sold under a PTC, pass-through certificate, it has to be rated, and the rated commentary has to be mandatorily made public. So I think anybody who's here can type in Equincia PTC, and they can see the coupon which is there in all the other PTCs that we have issued.
Perfect. So, folks, we have the numbers, and we can tell you that the rates are broadly the same. Maybe difference by a few tens or 20 bips point, but you can now see the details in the way that Manu has described. The next question, which is largely around grip, and I left this for sort of the last. Suresh has asked, can you give me an assurance of security that my investments on grip will all do well? And I've always said this, and I'll say it again. All investments have a certain risk, right? And I want to make sure that while we build every security feature possible, we work with partners who do the best diligence. We do tremendous amount of diligence at our end, and we really spend time on the security structure. We cannot give you assurance of your capital, right? We at no point of time want to give that to you. What we want to give you assurance is that we would have put every effort in identifying these instruments and then bringing it to you. The other question that I wanted to answer in the end is, what are the real risks of investing in this instrument despite the safeguards? Manu can add, but I think, because of the security feature being 23%, 23% of the loans have to default for you to have a loss. The risk is, if more than 23% happens, there could be a delay or default which impacts your returns, but that would require a significantly large number of invoices or loans to go bad. And that is the biggest risk. Manu, anything you want to add on the risks?
So I think from the AUM that we have and the transaction that we are talking about, it is quite minuscule, about say about 2%, 3% of the AUM that we carry. And in terms of the disbursement that we do, it is just a fraction of a single digit itself. So I think risk, as Nikhil mentioned, 23 more than 23% of the loans are defaulting, then the investor getting a hit. I think it's a far-fetched possibility. But having said that, no investment with a double-digit return can be absolutely risk-free. These are not government bonds, and this is a money market instrument, a pass-through instrument with nearly double the returns which is being given by a AAA rated government gilt bonds. So that risk element remains, but we have tried to, or rather, the instrument is designed in such a way that the risk to the investor is minimal.
Thanks, Manu. We'll take the last question that's there from Murli. Murli, I think that's a great question, and thank you for asking it. The question Murli is asking is, during the replenishment period, because new loans are given out by CredAble, is the quality maintained, right? Or does the risk change for the investor? Murli, one of the beautiful parts of this structure is that CredAble and us actually document, and that information is available to all investors in the information memorandum. Actually document the fact that the quality of investors or the quality of the lenders, quality of the borrowers in the replenishment has to be consistent with the quality of borrowers that were originally in place, because you as a retail investor have no control over that, and all you can do is make sure that today CredAble and us are agreeing to that in the first place. So there will be no change in the quality of the exposure you're taking. The diversification, the quality of the lenders will remain the same, and hence the quality of what you're buying into remains consistent. Okay? This is a very common practice in replenishment structures, and that is the same practice that we have also followed. Perfect. With that, we've actually managed to answer the questions here. I do know that this structure is different from what you've typically seen in invoice discounting. I hope Manu and I have been able to communicate some of those differences very clearly. If you have any other questions, we'll be very happy to answer them. You can write to us at invest@gripinvest.in. You can write to me at nikhil@gripinvest.in, or you can contact your relationship manager, and we'll be happy to address any questions that didn't get covered here today. Manu, thank you so much once again for partnering with us and also taking time on Saturday evening. Really appreciate your thoughts on this webinar.
Yeah, it's an auspicious day today. I think it's Baisakhi, and I think it's a good time for investor to at least take a call. And I think with the experience and the past track record with such instruments that we have, I think it's a good way of earning a decent amount, double-digit return in a shorter time frame with a self-liquidating underlines.
Yeah. Fantastic note to finish the webinar on. So thank you and have a great weekend.
Investments in debt securities, municipal debt securities, securitized debt instruments are subject to risks including delay and or default in payment. Read all the offer related documents carefully.